Good afternoon, fellow traders. We are getting into it this morning, getting into that stock market analysis. Going to watch some Jerome Powell today. And a few things just before we get started, I just wanted to mention this is the type of thing we want to see. This is a clear setup here for Palantir. This is what we have posted to the Patreon earlier this afternoon. We posted this earlier just a little bit ago, and I just wanted to show it to you guys because these are things that look more clear to me. This is a clear signal for Palantir that it might experience some kind of pullback, some kind of downward trend for a moment here. It never means a stock has to go straight to zero. We still have to manage the trade, but as of right now, the 30-minute diverges. This is the exact setup that we would look for when you take the course. When it's very clear, this is a good setup for some kind of pullback, and we're going to manage the trade just in case there is another push higher. We can pay attention to those things. The best part about this is it has a 2-hour divergence at the same time. Okay, so you see how we can still find proper setups. I'm glad that I'm going live and things like that, so other people can tell me stocks to look for, and it actually helps me find setups. And then if I think the setup is very good, I put it out on Patreon. So if you want to get learning about these type of setups, this is now confirming on the 2-hour chart. Remember, 30-minute divergences like to roll over the 2-hour chart. That's right there, looking for another confirmation. Very cool to see there. So part of being the Patreon is we do post setups. I post them if they look good. And right now I'm not seeing anything that looks very clear, but this one looks pretty clear to me. What this means is the 2-hour can roll over the daily, and this is everything you'll learn in the course. It's only $100 for the month of June. We're seeing some crazy price action. It's a good opportunity to just kind of like sit back, relax, and be like, wait for the bigger time frames, maybe take the course in your free time. So that link is down there in the description, but this can roll over the daily. Now, why this could experience some more weakness, maybe going down towards the 200, maybe going all the way down towards $20, is just because we are still pretty close to the center line if the daily crosses over. That's very important. So if I see something curl up right around here and this isn't able to cross, I know, hey, this is not the time to be taking any more downside. That is when I would take profit on the position. Thank you guys for liking as you come in. We get 10 likes right as you guys come in, so I really do appreciate that. And I'm just getting some things set up on my other screen here. We have to make sure to look up, I think Jerome Powell speaking in about 15 minutes. So I wanted to be on with some time here to go. And when I took that trade, when I posted that trade, I went ahead and saw that 30-minute cross. It's already up 18%. So very good to see there. Thank you guys for joining. I hope you guys have had a decent day. We can always find some setups. This looks like a pretty good one, and it's exactly what we learned in the course, how to find. Very good. The only thing missing here is a weekly range. We would hope to have a weekly range for this, but this is a pretty good move early on in the week. So usually you do see that weekly range go up in these areas at these highs or at the closing high. They do form around these areas. So we don't have that, but that would just be another added thing for that 3 to 5 reasons to take a trade, okay? Let me get my headphones. We're good to go. I worked really hard so that I could come live here. That sounded gross. So that I could get back on the live stream for you guys this afternoon so we could watch this stuff together. So let me make sure that we can do this. Let me do this on CNBC. We'll do CNBC. Okay, so we have that one ready to go. And then we're all set. All right, so we're going to watch this Fed meeting. Remember what just came out with the data. Let's take a look at that real quick. Looks like from the interest rate decision, looks like it's been held at 5.5, if I'm reading that correctly. It looks like it was held at 5.5. And then the economic projection, policymakers do not expect it will be appropriate to reduce rates until they gain greater confidence. So it seems like the same thing, but Jerome Powell, we'll have to see what he says this afternoon. That's going to be the most important thing. What is he talking about? All right. Shop ripped. Oh, good rip higher, going up to the 50. Look at the 200. Very good scoop up here. The thing is, you'd really like to create that handle around here to keep going. So good move. Daily is still negative. That is one thing. Daily is still negative. Keep that in mind. That means the trend is bullish contrarian, but as of right now, you're trying to get back to positive. That is a good sign, but watch out for rejection in this area. Looking at a 30-minute, what do we notice in this price action? Well, we might see a little divergence on the RSI. I don't necessarily see it on the MACD at the same time. But the back is not your friend. Pulled the trigger to the bullet to a stranger. Oh, and one person was asking how you calculate these. You can literally, I think, look up the calculation on Google, but it still took me a little while to get a hang of calculating these ranges here. But let's go back to shop for a sec. Look at that 2-hour chart as well. We just were pointing out some possible divergences there on the 30-minute. So there's your tapering move with a bunch of little divergences there. Then you see even more tapering that gives you those divergences over and over. Good scale in position. And then boom, you see that run up. Very, very cool. Now the 30-minute is very positive. You have some flat divergences up here. So you can see a turn down, but you're very positive. So if this just curls down at any time, curls back up, just like we have been doing, you'll see more positivity out of the overall move. So now I'll pull up a 2-hour just to check it out real quick. Yeah, 2 hours in need of a pullback, but it's very positive. That is a good thing. So I would look for if this is going to curl up, curl back, or curl down, curl back up. That would be more of a time to take a position. I'm not someone who chases. I don't chase. If I miss out on the move, I miss out on the move. I look for the setup later on. Apple heading higher and higher and higher. Not even a 5-minute can go negative here, man. Tesla, solid move, solid move. Like I said, if we can break through these areas, what did we say? 173 to 172, you break through that, you probably keep going, and it looks like you keep going. Now, am I going to chase this or anything? No, I'm not. I think rejection at 180.92 could be possible, but solid fake out. They're ripping money away from people. Amazon's starting to turn down on the 2-hour. That's a good sign for a pullback, by the way, for Amazon. Nvidia, this one here, I thought about it, guys. I actually thought about it. You have triple divergence on a 2-hour. That can roll over a daily pretty quick. We'll see what happens with Jerome Powell. I think that's pretty important. We did slam that like button. Yeah, I'm trying to do my best in an environment like this. Pretty crazy environment because we're just seeing things rip. Now, this should not be the most unexpected thing because we're still within the daily, but we are outside of the weekly. So we do, like, this should be expected that a move like this can happen. I just think the way that we made the move is a little bit fishy in this area. So now I would really like to see at least a 30-minute pullback, and then maybe we see something like this going into tomorrow, and then that's ripped away. I'd be very, very cautious going forward still. I think it's still a time to be cautious. We're seeing a lot of calls come into the market still. And then as we see the VVIX, actually the volatility, you see this spike down, it's still holding up. And volatility was not holding up, but it's trying to create this higher low. Intel just showed at the money, this AM is getting shorted every 20 to 30 minutes. Yeah, and I think you're right to say that. At AMC, talking about AMC and GME, the 30-minute did cross. The 30-minute did cross. Okay, so now you're looking at this and you're going 15 minutes starting to go negative here. Okay, that's not what you want to see. The 15 minutes not negative for GME, but they did cross on their 30-minute, which tells you this isn't the moment anymore. This is now in a pullback. So if that wanted to drop all the way down, that would make total sense, right? But anytime this curls up into positive territory, that could be here, that could be way over here. That could be after a lot of damage is done and then it curls up way over here. Anytime that goes back to positive, that's when you know the momentum is with you. The momentum is with you. The momentum is with you, right? So that's what we're seeing here. Now we would say 30-minute pullback until that goes negative. Then we say maybe there's some more damage being done there. Now, one thing is the 2-hour was able to cross up. It's crossing right back down. So we're paying attention, seeing if that can remain positive. As of right now, trying to turn down, we'll see. I think the 15-minute here is very, very good to watch for the shorter term because it's right by the center line. See, it's right by the center line. If that can actually cross, you see how it denies it here. It's not crossing. This did not confirm more upside. It rejected. Now, if that can actually cross, that would be a good sign. Yeah, it doesn't stop. That's why I'm really pointing out this. I think this is something that's more clear. I really am thinking this is more clear. Now, we're managing the trade because we know rigged moves can happen. It might mean our timing is just a little off. Look at the triple divergence, or the divergence here on Palantir. Very, very good sign. You're confirming the 2-hour, but we'll notice this is happening. So we go over how to manage your risk when you take a trade. Like say you took it on this bar right here when that crossover happened, just like I did. That's where I took it. Okay, I managed the trade. If the 15-minute curls up, then the 30 minutes not going to go further down. So maybe if the 15-minute curls up, I can see that, I can manage my risk, get out of the position, and if that curls back down, then I can be right back in. Now, if that starts to go way up higher, I'm not going to do that. I want it to be slim. I want it to be small, right? Because if it's way up higher, then that means I could go do this. I can make some kind of divergence in the future, and that might be the wrong moment again. I don't want to be getting in, getting out, getting in, getting out too many times. But what I can do from here is say, if it just gets some kind of little pop and drop, or if that never crosses, I don't even have to manage my risk. SPY daily move, it could be hitting the upside soon. I think this is the overlay. Remember, we were saying this morning, yeah, I think we get into this zone. Now I think we pull back, right? And we see some kind of maybe 15-minute divergence. I think that would be solid. But just know we are in an environment where tomorrow we get PPI again, and that's supposed to come in lower as well. So if we keep with this trajectory, that would mean something unexpected happens, and maybe we end up higher. So we'll pay attention to tomorrow's daily expected move. What up, Vital? Are y'all in calls? We don't do anything together on this channel, no. No interest rate cuts approved, higher interest rates for much longer. It's because you're in a rigged environment, and I think AMC and GME are causing it to be even more rigged than usual. Yeah, we can go through GME. So for GME, you need to understand the big signal yesterday we paid attention to was AMC curling up right here. And then we said, I think AMC, they can't suppress both at the same time very well, because when AMC started to rip, once it started to get pulled down, right? Pulled down, that's when GME made this move. We went and looked at the timestamps in yesterday's aftermarket video. So what do we notice? The hourly curls up. That means positivity can come because you can go into positive territory. It's contrarian here. It's positive right here. Now we're experiencing the pullback. So the overall statement I'm making here is, if the hourly crosses up and goes positive, that's when you see big moves. Look, right here, crosses up in positive territory, big move. Right over here, crosses up right here, big move. Right? Even down here, like down in these areas, you're in negative territory. See how that's kind of a struggle, but once you see the divergence, that completes, big move. Okay, back here, crossed up right here, crossed back down, but the next day popped up here, it never went back to negative, boom, big move. Very, very cool, very good questions. So what do we want to pay attention to here? Well, how could we get screwed if we're in an hourly trade? The 30-minute. If that 30-minute crosses, the hourly can't keep going up if the 30-minute is saying pullback, right? That's not a good thing. If 30 minutes saying pullback, then the hourly can't remain crossed. It might curl down. So if this 30-minute crosses, you want to see if that pulls back. Anytime it curls back into positive, anytime, it could be here, it could be all the way over here, it could be all the way over here, right? We want to pay attention to it. But right now, it's saying on AMC at least, you're saying pullback, okay? Big thing for GME though for the day would be if we are crossing down on this daily MACD. If you're crossing down on the daily MACD, that means daily momentum is not with you. Daily momentum is saying pullback. So you really want by the end of the day that to show green, this to show green. See how it's kind of struggling? It's going back and forth. You can see it kind of turning white and then turning red. You want that to at least stay white. That means daily momentum is still with you. AMC, you've already crossed over, so you really want to see some buying up from here. But right now, 15-minute is really what I'd pay attention to. You see the 15-minute get close to the center line. Right now, the 30-minute's about to roll over. So if the 15-minute buys up, that 30-minute will not roll over. I am a little bit un poco sleepy. I actually slept well last night, but we've had, like I said, I am probably one of the busiest people you guys know, like genuinely. I do so much stuff. I'm a dad, new dad, first time dad, so I'm struggling. And Apple is still ripping, by the way. Apple just nonsense move. This is where it's important to understand weekly expected moves. You have to understand that it's not, this is the weekly expected move. When I go above that, I know that there's a 68% chance for a drop, so I take shorts and that goes down. That's not how it works. You have to see weakness up in this area. Did we see weakness in this area? Did we see a reversal signal? No, we saw a pullback, but we just saw sideways price action, pumps back up. You can see crazy stuff outside of the weekly expected moves. That's very important to understand. You don't want to fight against that crazy stuff. Now, if we start to see, you know, this go down and then curl up and then curl back down and then complete something here, right? We go like this. That would make sense because we're rolling negative, but this does not say weakness. That says strength and don't fight against it. But you're outside of the monthly, you're outside of the weekly. It's just crazy. Don't be honored. Don't be honored. I'm just a small fry. What do you mean when you say 15-minute and 30-minute exactly? Are the lines at the bottom you're referring to near the white lines daily momentum? Yeah, so these are daily momentum. So MACD, this is a 15-minute chart you see in the top left. That's a 15-minute chart. So what I'm overall getting at when I talk about GME is I look at a 30-minute. That's about to cross, right? So what would I think to myself? Well, if that's not going to cross, I need the 15-minute to cross up. If that's not going to happen, if that keeps going down, then 30-minute momentum goes down. And then it's important to understand, we go over in the course, the center line is the difference between, you know, positive versus negative territory, which means positive trend, positive price action, negative trend, negative price action. Okay, so if this crosses over, how close is it to going into negative price action? Very, very close. So that would tell me this most likely is not the moment. But if this could maybe by the end of the day turn right back around and flash back to green, that would tell me this is the moment. You get that? Because it's positive territory. So positive territory right here, positive move. Positive territory right here, positive move, positive move. You can, 1Q rep. The signals will tell you. I went back and I looked at GME and AMC. The time that they ran up to hundreds of dollars, they never curled down again on the 30-minute. That's why I'm paying attention to a 30-minute. If GME is going to do what it did last time and see a rip, throughout that whole rip, it never turned down on a 30-minute. Even when it curled down, it never curled down on a 30-minute. So the fact if this curls down, I would say that's not the moment. Now, the thing is, it could just gap up tomorrow, right? It could gap up tomorrow. AMC, see that curling down? That means it's not the moment to me. This means pullback. But if this could turn back up by the end of the day, that'd be great. But it could just gap up tomorrow, be crossed, and then just never cross again. Oh yeah, I own both. I own AMC and GME. I have option plays. I have the stock in both. I have all of it. Now, I also have that small position. I'm willing to lose all that money. I pretty much put like a regular week's worth of profit behind it. And then I have my regular trades right now. PLTR is my main play. FSLR? It's possible. And the reason I'm holding the stock and only trading back and forth one position while holding another one is just in case there's just a random gap up. And then that 30-minute never gives me a pullback for an entry. I just want to be in the move. Manifest positive vibes, yeah. Let me see here. What is it? FSLR has been asked a couple times. So this one's ripping to the upside. So on a 30, if I just look at the 30-minute chart and then I look at the RSI and that's very overbought, and I look where the MACD is, and I look what happens when the MACD gets this high. Well, when the MACD gets this high, it doesn't do it often, but what happens? Well, the MACD ends up turning down. MACD up here turns down. So that can continue, but most likely this will get some kind of 30-minute pullback, and then I'll know, the MACD indicator will tell me if there's another positive move, right? I don't want to YOLO and jump into something that's already been bought up. So now on this, we most likely do have a 2-hour divergence based on the look of it. So you see the 2-hour divergence forming. So this would tell me weakness in momentum. And divergence, if you don't know, because there's some new people here, it seems, divergence is when the price of the stock goes higher, but your momentum indicator is showing downside, Now, the important part about showing these drawings is this has to confirm, meaning you have to start to see a red bar here. You have to have these cross. Now, the reason that this divergence is very good and steep right now is because the 2-hour is very close to going into a negative trend. A negative trend would mean we stop doing these type of moves, we start doing these type of moves. I hope that was helpful, but a lot of the time I like a 30-minute divergence and 2-hour at the same time. That's why Palantir, I really like it. Yeah, Palin's here. So the difference between this one is look at the 30-minute. So look at this one, the 2-hour, you see the divergence. 30-minute, look at the divergence. You don't see a divergence in the near price action. So that's why I don't like it as much. Palin's here. What do we see right away on the 30-minute? Well, we see divergence, and it's completed. So now we have to see, first of all, the rigged move. We teach you how to get out of those in case there's some kind of rip up. It means you might be right. You might just be off on the timing a little bit, okay? We teach you about that in the course a little bit, but that's a lot to go into. So there's a 30-minute divergence. You see it's down. We see this is up. We see this is down, and it's confirmed. That is great. Now we want to see, oh, but that means this. I should look at a 2-hour. Oh, look, there's divergence. There's divergence. There's an upward price action. There it is. So we have those at the same time. So that means there's some weakness in momentum here. And the thing about this, though, is it doesn't mean the stock is over and it's going to crash down. It just means, hey, there might be some kind of pullback that gets us to the center line. There might be some kind of pullback that gets us to that center line, and then it curls back up. All right, guys, I got to put up the Jerome Powell's talking.
Pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Questions are more important, just so you know, but I've never seen him read that much off on the computer.
Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up,
then why say
the way
it?
you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Thank
No,
you.
I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast.
I'm sorry, but why say a projection and then immediately after you give the projection, you say we have no confidence in this projection? That's just stupid.
At better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Yeah, he has no idea. That was a great question.
Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the.
That's the signal we're looking for.
Every cycle, and we talk about their
seeing a wick, so
projections and the dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it that is on the committee a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and
the data's not at 2%, buddy.
They're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again,
unemployment ticked up
we
in the last reading.
We see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't. Most people don't. and I'm not going to get into the specifics, but you have the ability to do that. So that you know what's in the SEP actually does reflect.
You're here to get into the
data
specifics
that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
That was just rambling.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. Greg. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago. And we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force.
Immigration channel, on the illegal side, immigration channel or immigration channel? I want to know.
Well, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course,
PLTR is rolling a little
as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile.
Gold is rolling.
You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So
Meta's starting to roll too.
We're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence.
Unemployment ticked up,
begin to
4% now.
Loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So you really, if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. You know, we're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret
Netflix might
what
be
that
rolling.
means about how the committee views its current
Hourly's
policy
turning
today?
over.
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run
NVIDIA triple divergence on the hourly chart.
Concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit.
Dow is
It's not
just
something
heading
we
lower.
observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think that the concept of R star, it's a very important concept in economics and in what we do. But
M2 money supply is going up a little bit, though.
Where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having
small caps are rolling hard. IWM.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about
GameStop about to confirm a roll down on the 30-minute MACD.
How much progress are we making on inflation, and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is
Bitcoin is
price stability,
rolling.
another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing,
Bitcoin is
think,
dropping fast.
That's a good reading.
2% down in 15 minutes.
And, in the
10
meantime,
minutes.
we're asking, is our policy stance about right? And we think, yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for.
Maybe they lied.
So just to follow up
Citron
on
or
that, I
whatever.
think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press.
My
I was
ears.
wondering if we can, on inflation, if you can tell us a little more about
let me get the right notes out.
inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in the economy. I wonder if you could tell us more
So
about it.
I think it's true that that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in
Volatility dropping while dollar pumping right now. SPY not seeing a drop and the dollar's pumping.
We've taken some signal from that, but and of course housing services, you're continuing to see high readings there. To some extent, that's catch up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level.
Seeing some green for AMC here, seeing if the 15-minute can roll positive again. Right now, it's still saying negative, still bearish.
Rachel Siegel from the Washington Post. Thanks for taking our questions.
GME right at the center line, so 15-minute.
How many cuts could be expected this year? But can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying we're not at that stage, so I don't know what we'll be thinking about at that time, but it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say, it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is.
We know our action affects communities and people, and
inflation's moving.
But it is what it is.
That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Hi, Chair Powell. Thank you for taking our questions.
They're not doing anything to any data point.
What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be.
I wouldn't fight that, though.
How they should think or feel about the economy. That's
Things
not
parabolic.
Where people experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market.
Has to cross that.
Unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%. Very long time. We had a period.
I'm keeping
of
my
high
eye on
inflation.
it.
inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down.
You're doing nothing. You're not doing everything you can.
You've indicated one interest rate cut sometime this year, and I
You're
know
increasing
you don't
the
have
money
a crystal ball
supply.
up there, but
M2
a lot
is
of
going
people are
up.
watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Sticking with it until the poor is as poor as possible.
Claire Jones, Financial
Independent,
Times.
the middle class is
just
gone.
on the change in the statement on there being
Dollar still
modest
going
further
higher.
progress on inflation.
Volatility hitting 12.12.
Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought.
Yeah, his blink rate is insane. You're right.
We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does. And it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to.
I'm still listening. I'm just going to pee real quick. I'm still listening, though. Okay.
That someone is getting by living in a home that
We'll
they
be back
couldn't
in 1
rent,
minute. I'm still
they're actually
listening.
living in it, and some countries should just ignore that. But that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned.
Delinquencies.
What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what that you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home, but households were in very, very strong historical.
GME showing a good bounce that faded.
So we're watching that carefully.
We need that across on a 15-minute.
What do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago, and we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right, though. We do see the same thing other people see, which is increasing financial pressures on more lower income people,
which is probably exactly what they want.
The best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So and also the fact that we look at all of the whole situation. So a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I can think of things many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
You know, I don't actually have that kind of mechanical thing.
He's not going to tell you.
I get that. You know, as many good ones as we had bad ones, but no, it's not like that. It's the whole. It's going to be the totality of the data, the labor market data, the growth data. In terms of inflation, you know, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you
I might
specific
squeeze
numbers
again
because that points to dates, and I just don't think we're not at a point of being able to do that.
I'm looking for a divergence up here.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy.
This is as loud as they have it.
Thank you.
I literally have it to the tip. I have it jacked up on volume.
It's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE. We're at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long and the quest for confidence for inflation.
You know, so we're well aware of the two-sided risks here. Let me just say, what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate.
I don't even think this is worth watching. It's like watching paint dry.
To approach this question carefully, and that's what we're doing.
Just to follow Chair Powell.
Palantir, if that 15-minute crosses, we got to manage that risk. We're watching it.
Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals.
That's the history of the Fed, by the way.
Framework, and we think we're doing that.
The history of the Fed is they hold rates too high, something breaks, then they drop them dramatically.
Thank you,
That's
Chair
exactly
Powell.
what is happening right now.
International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that?
Banks
Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be
makeup contours?
Communications generally. I'm not going to say that we'll look at this or that particular thing. and all the other details, we don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Of course you are. You always do.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'd be looking at the aggregate numbers and asking ourselves.
Yeah, I don't think this is helpful at all.
At the aggregate level.
I think it's more helpful to look at charts, guys. So
any price that contributes
I just don't
to
think this is helpful
would matter. Any price.
I think Dan's right.
Disinflation would matter too.
This is
I wouldn't
not
single out housing as having
at all.
A special role there.
Yeah, we'll just he's done in a couple minutes anyway. That is like the most useless bullshit we've ever, it's just awful. We understand, you friends with that yawn, my bad. We understand that we affect communities and all that BS, and then they give a projection and they go, we have no confidence in that projection. That's all you have to hear to just say, you can't trust anything that comes out of their mouth. Now we're seeing that sell off, and it's it's not because of anything he said. It's just because he didn't give us a rate cut and everyone's expecting the rate. It's Jesus, all you need to take into consideration, he's saying, the Fed in the past, they hold rates high and then something breaks. And what we're trying to do is not make something breaks. Well, what are they doing right now? They're holding the rates high exactly like the other people do. And they're not reacting to the data. They keep telling you they're going to react to the data. They're just staying the same. They're holding it there. And then something's going to break. We know that we have 63 banks that need what is it? Some kind of billions amount of hundreds of billions of dollars. They're insolvent. We understand all of it. And then while he's talking, we just see the dollar start going up while the SPY's going up. And we're just okay, so the insiders read what's going on. We see volatility dropping while the dollar's going up. And then it's just it's like kindergarten shit. It's just so stupid. It's so he's just telling you the opposite. I hate that I'm saying a bunch, by the way. But we're coming back down into the weekly expected move, okay? So that's something we can look into. Right now, the 30-minute looks like we need some kind of pullback. Apple, right, started to actually see some weakness for once. Maybe that's going to just be a 30-minute pullback. It's still very, very bullish. Tesla, this thing went up to our point, 180.92. That little area up here has been very good for us. Now we got to see if it can remain in positive territory maybe after a pullback. Amazon, this thing started to roll, then went back up, then started to roll. That's why I'm saying the bigger time frames are going to help us here. Just hey, if you see a red bar on this and it actually completes, you're probably going to see a 2-hour pullback. Okay, NVIDIA, if you see this 2-hour rollover, you're probably going to see a pull. Probably not, actually. NVIDIA and Apple, probably not, because these things are just so rigged. AMD, this one as well, already, at that weekly expected move. So we expect some positivity. PPI tomorrow. Maybe we can pay attention to that. The actual reactions with the data. Meta looking like it needs to roll over for a pullback, but this market can just keep going ballistic. And XLU, yeah, it's dropping off. It gapped higher and then dropped all the way back down. It dropped all the way back down. That's all you need to know. That's all you need to know right there. You need to know the dollar's going higher. The stocks are going higher. And then you just want to pay attention to probably these guys. Now, Google, I was watching this because on a 15-minute, it really looked like we were about to scoop up and make another move, but then it started to reject, so I didn't want to say anything. And then now we're getting the rejection for Microsoft. Microsoft's way out of its weekly expected move as well. We're just seeing a lot of crazy behavior. GME and AMC not able to curl up. They see some positivity. They smash it back down, right? So There's just a lot going on. And then you go over to Palantir and you're like, hey, this didn't cross up on a 15-minute. That 30-minute divergence looks pretty good. That hourly divergence just is about to cross. And my 2-hour divergence crossed before my hourly one. So Palantir looks like a very clear setup for some kind of pullback as of right now. Sure, that can lead to a pullback on the daily scale, but there's going to be fake outs. We'll see what happens with this one, but this one is very, very clear here that the weakening in momentum looks pretty damn clear. So I'm looking at this one, just holding it on my other screen, now up 19.6%. And whoa, what's happening with Apple? Okay. I was like looking at Apple options just to see if I wanted to take something, and these things just jumped in value real quick. So very interesting there. We'll pay attention to it, but overall you need to see volatility. Look at that thing. Now we have the divergence. We talked about a 2-hour divergence down here. This is what we talked about. Look at the 2-hour divergence. It is there. And so if that thing starts to scale up and we cross over, that means volatility is back. Volatility can come in as soon as tomorrow if this can cross over. That's very important to understand. It has to cross over, okay? Just because it looks like it's going to, look at that, it's fading now. It has to cross up. Let the charts tell you that volatility is coming back. Now, this might happen in the post market, and that's a bad thing because the dollar's ripping again. What did we do? We came back down to the zone, right? We rip, we come back down to the zone. This zone's been very, very good to us. We've marked it off for a very long time, right? Very long time in this zone, and very important. So we're paying attention to it. The main thing about the dollar that you guys have to understand, the main thing here is that the dollar came down during that big run up back in October, and guess what? It bottomed back in December. It's been going up ever since. So there are still insiders who have sold all of this. They're not in the SPY. They're not in these individual stocks, and retail is holding most of the bag already. This daily MACD has crossed up. If that goes positive, that's most likely your moment, and you're starting to see that thing buy back up. So we'll see what happens with PPI in the morning. We still got to pay attention. We got a lot of rocks in our stream. XLU dropping, what it mainly means is we've been using XLU because the SPY's been falling. It's dropping even harder. My argument for this is the AMC and GME stuff is messing with the market. The market makers aren't putting volume into the market right now, and that's why you're seeing that weird sideways behavior. While XLU drops, the SPY is holding up at these levels now, making another move. Eventually, I think it catches up. I really do. I mean, this is the signal you see before a crash, so I highly assume that this catches up eventually. The only thing that would be different would be if XLU catches up to the SPY. That would be different, but that does not happen very often. It really doesn't in this environment. SPY really starting to come down with that outside of the weekly expected move. Thank goodness that we were circling like, hey, we actually have some analysis for the day because of this little zone here. We'll see what happens. We'll see what happens. Right now, the 30-minute curling over, that right now is just considered a 30-minute pullback. But XLU is just dropping right now. That's crazy. Apple starting to drop off. Tesla starting to drop off. Amazon giving up the gain there. Nvidia starting to drop off. AMD dropping off. This could create a divergence. We'll watch out for that outside of the weekly expected move. Meta trying to drop off. Let's see if it rolls over the 2-hour. Microsoft, this one's way outside of its weekly expected move now, so it's got a big drop coming if it wants to. If we see something bad, I think these things start to drop, but they could just hold the market up higher with Apple and Nvidia. They only need to use 2 or 3 stocks. That's the sad part about the stock market today. AMC is starting to drop off, coming down into negative territory. Remember, right here's what we said. If the 30-minute crosses over, it's not the moment. You're going to see a pullback. You need to see if that's able to cross up at any time. GME starting to confirm that as well. And you need to see if that can turn up at any time. Now, this could happen in the post market. This could happen in after hours. This could happen in the night market. So be careful. While yields go down, yes, it can. Yes, it can. Yeah. It depends on why the yields are going down, right? Yields are going down, but they're starting to bounce up because he just said no rate cut, so they're bouncing up. TLT is probably reacting to that, right? Reacting to that. This is actually where the weekly expected move is right along these highs. So weekly expected move for TLT right here. Very, very cool. Now you would say this would be a crazy gap-like cup and handle. Probably don't want it to come down that low, but if something breaks overnight, we'll see. There are 63 banks that are in trouble right now the last time I looked. But SPY, we'll see. The thing is, the 15-minute, I'm pretty sure it's still positive, right? It's still positive. So all that has to happen is this 15-minute goes like that and we see more upside. That's it. You need to understand you're in a rigged market. Now, PLTR, this is the trade setup. This one here, managing risk would be 15-minute curls up. That means that this 30-minute can't keep going down. So we manage the risk for a second and maybe the moment is more over here. As of right now, I'm pretty confident in this one with that 2-hour crossing over. So if the 30-minute rolls up, I most likely will manage the risk here. But as of right now, Palantir, the 2-hour did cross, 2 bars being made here, pointing down. Now up 33%, so very, very cool. Very good signal there. This is what you look for, guys. This is what the course encourages you to look for. Look for the clear setups. This is a clear one. You see it on the hourly. Super, super clear down here on the MACD. If it'll load, my goodness, there it is. Super, super clear on the MACD. Super, super clear on the RSI at the same time. It's very, very good. And then you just see if that 2 hours confirming. Very cool. AMC. This one here, curling over on the hourly, not a good sign, right? Not a good sign to be curling back down on these 2 hours. We wanted to stay positive. A lot of things can happen overnight for these. So I have positions that I hold. I have positions that I trade back and forth. And I'm starting to just hold the position instead of trading it back and forth. Like I'm thinking if this can just hold up at higher levels and turn back up, that's going to be a good thing. So maybe you create like a little trend here and just say, okay, there's where if you break through, okay, we can see dramatic downside. But for now, it looks fine. I don't think there's any real problem with it. The only problem I'm having with GME and AMC is the daily not being positive anymore. Bank of America going bye-bye. Bearish on PLTR. Yeah, it's just, it's a reversal signal. I'm not really like bearish. I'm just saying it has the chance for a good pullback on the 2 hour. You had 30-minute divergence and 2 hour divergence behind this at the same time. You could swing right back up, right? We could swing right back up and then do this. That would just mean my timing's off. I need to manage my risk, but this is a confirmation here. So all I know that from here is we're very far away from the center line. So what I'm trying to see here is if there's more of a dramatic pullback and then that can curl back up. If that curls back up, then I know to take profit. So 30-minute here, if that curls back up, I know to take profit. I know to get out of the position if it just does that. Because then it might be doing this, and then the timing might be better right over here. Oh, Bruce is sleeping. Listen, can you guys hear him? Can you guys hear him? He was dreaming. He was having a dream. Oh, Bruce, you're such a cow. Oh my God, that was so funny. Oh, you gotta love Bruce, man. Alan's more of a, when he's sleeping, he goes like, "Boof, boof, boof." Bruce is more of the he moos and stuff. Oh, she doesn't need me. Alrighty. Pretty good though. Not bad. It's just nothing that really changes our mind about anything. That's the thing. It's like we put so much emphasis on it, and I would rather him just not come out and talk. All he's doing is being more misleading. He's like, hey, what are you guys going to do? Well, we're not going to do anything. Okay, please describe to us why you're not doing anything. Okay, we can't give you the info of why we're not doing anything. Oh, well, can you give us anything? Well, the data, we have to follow the data. Oh, you guys don't really react to the data. Oh, well, that's because we don't want to do anything. Yeah, it's pretty funny. I told you that you guys roast her for making sandwiches all the time. Sharing is caring. We usually share our charcuterie boards. I really assume it will. It's just whenever they want it to. That's the sad part about this market, is whenever they want it to. So as of right now, you got 30-minute that's negative, pullback. You got 2 hour that's saying pullback for AMC. You have daily that's saying pullback for AMC. So you can see more of a pullback here. And then GME, what are you noticing? Well, pullback for GME as of right now. Then you have 2 hour says still in a pullback for GME right now. And then you have 30-minute that says still in a pullback for GME right now. So in order for us to see upside, you have to see crossing up in positive territory. Now that can happen overnight. So that's why I'm just holding most positions. And the main trades, right? This is an amount that I'm willing to lose in all this stuff. But Palantir is the main trade right now, and it's looking pretty good. Already up 30% on that. So just I took the end of the month strike price for that. But looks good so far. Volatility, I really think we're going to just see this curl up and shit's going to go haywire. We'll see though. Dow trying to buy back up. I'm assuming that's because of financials. Yeah, financials catching a bid here, which is interesting. He says like, hey, higher for longer. You guys are going to struggle more. And they're like, okay, let's go up. Was that Zin? No, it's ONS. I used to be a smoker, so I do ONS. Makes me not, you know, hit the smokes, hit the vapes all the time. I was a little partier back in the day, not no mo. Nvidia is still undervalued. Nvidia is, just because it says it's $100 and whatever dollars, Nvidia is worth more than the whole country of Canada's GDP. So undervalued, I would be very skeptical of profits of what's gone on with AI. That's what I would say. Apple's the same. They do splits to make the stock look more affordable to us retail traders, but okay, I'm going to leave this on AMC. We're going to leave it on a 30-minute. Let's see if we see anything crazy happen. Actually, 15-minute, we can still look at this. It's still close enough to the center line. See if any bounce back happens. I want to see. Alright, I'm gonna eat some num-nums, and I know that I just turned on music and you guys can hear it, and I'm sorry. Yeah, that's as loud as I can make it for the stream, though, by the way. For their little stream. That's as loud as their shit goes. I try. Really hard. That's not saying much, our Canadian. Scored some brewskis. Let's freaking go, dude. I'll do it. I'll tell you what. If AMC and GME ever get above 100, I'll slam a beer. I'll drink a beer with you guys, and I'll slam a beer for you. John, Luke, do you use cash count or margin? I have a little bit of both, so. My fun account is on margin. No, I want to try that beer he had. It's funny that I do margin on the fun account, but if they both get over 100, I'll stream my wife giving me the ape giving playing video games on my arm. You just gotta build slow. Build slow and get above 25K, and usually your platform's fine with it, right? If you're using, like, I think people said Robinhood has that. You want a bite? Here you go. No. No, Carlos, I would never show you guys that. Finally, some volume came back in a little bit. 40 million. What's GME at? Yeah, I'd say there's probably some short selling going on today, at the end of today here. As you get to Friday, you're going to see crazy short selling again, but 120.6 million volume on GME. And a gentle 37. Half of what yesterday was. No, I don't give them human food. No. If I give Bruce human food, that guy, literally, you can't sit in the same room as him. You can't. He's a pit bull. He's stinky. Uh-oh. That's a crack. Now, remember, the 30 minutes is so positive, guys. If this just does this, people buy puts here. We'll see, but... Max downside for the Qs, monthly range. If you're looking for that quick move during the month, the best thing to look at, the highest it could go for the whole year is like 492 for the Qs, according to the options market. Look at that. Look at that daily range. Look at that. So for this week, you would say 452.92 to the downside, but for the whole month, which this is very unlikely still, you'd need something really bad to happen. But for the whole month, you have like a few weeks left. You could get all the way down to here. You really could. I would say most likely we're going to mess around again and see some kind of drop, do something like this, and then we'll end up in July. I think it's just going to mess around until they run out of money for AMC. Oops, sorry. Someone's like, oh god, guys. Alright guys, we bait enough people in. Someone's like, should we make Apple go higher? And then someone walked in and bumped the sell button, and they were like, oops, sorry, we set the algorithm to sell now. My bad. But yeah, that's how you think about it. By the end of the month, you could end up all the way down here, and it would make sense. You're not even halfway through the month, and you're already at the top. You're above it, so... That's just what the options market's telling you. I don't want to tell you my thinking, my thought, my this. I'd rather give you, this is a better piece of data than me saying I think. What's NVIDIA doing? Well, besides the rigged move, what is NVIDIA doing? You pretty much have a triple divergence on the hourly here. Now, this is NVIDIA. This is the sketch ball. I'm not trading this. Yeah, so for the Qs, your estimated low for the month, and then you'll get updated ones next month, but just pay attention week by week, right? If you pay attention week by week and we like end here this week or something like that, and you have a weekly range that's all the way down here, then here would be a great level to be like, all right, let me make some money out of this. But if you want to be holding that longer, then you would say, hey, by the end of the month, it could end up to 433.17. That's just what the options market's telling you. I just do the calculation. Now let's see what Roaring Kitty does at the end of the day. He's been posting pretty more consistently than in the past. More consistently than like last week, I would say. Last week he just like posted he's going live and then that was it. Apple? I have an estimate on Apple. Hold on. That was it. Okay. I had to look at my other thing. Apple. My estimate was sometime, maybe by July, we actually end up all the way back down to 175, and I'm being genuine about that if we see the crash. But I think what happens here is now you're up high, so you have to pay attention to these highs. So really you want to create the breakout here, like that. Somewhere in this little zone would make a lot of sense. 197.50 would make a lot of sense. You could go all the way down to 197.50 and still just be a pullback. Isn't that crazy? I'm sorry, I'm chewing into the mic. My bad, guys. Tesla, why you rolling? Another trap. You get it. Yeah, I'm not. You know what? The market makers are the real Oprah here. You get a trap. You get a trap. Oh no, I never let go. Something you said 10 years ago. They're canceling you. Uh-oh. We gotta see. This is kind of a do or die moment. It's like the 15 minutes and it's in range of going positive, so it's pretty good. You get a trap. You get a trap. Bruce, why are you barking so much today? Stop. Stop. Are you sleepy and things keep waking you up? Are you getting upset? Oh, I'm sorry, buddy. What a fun day. Until we watch Jerome Powell. Then it's not so fun. It's boring as hell. All right. Who did it? Who subscribed? Silas? Thank you. No, I'm getting a tattoo, and I'll get a tattoo live and chug a beer for you. I was not very good at chugging beer. I used to chug vodka bottles. And it wasn't cool. I'm not saying I was cool. That's not cool. I used to think that was so cool, and now I'm just like, God, that's so douchey. I'm a much better person now. Oh, that's a big-ass piece of cheese. No, my camera readjusted. No, go down, stop. Yeah. You want me to chug soju? Do you want me to die? If it gets to 1,000, I'll chug alcohol for you. No, I'm not doing that. I'm not doing that. That's a wrong precedent here on this channel. That's not right. If it gets to 1,000, I'll do a gaming stream and do a drinking gaming stream with my wife. You guys can see how bad she is at video games. Hopefully she's not watching. You're Russian? You don't like vodka? That's okay. Vodka is literally just tasteless alcohol. Tequila and rum is where it's at, let's be real. No, you're not gonna see my wife. She'll just be playing the game. You guys don't deserve to see my wife. Yeah. I haven't been drunk in I've had maybe a total of 10 beers in the last 12 months. Maybe. No, we just love Asian culture. We love Asian culture. We watch Asian reality shows. You guys want a good reality show? It's a Korean show. It'll make you feel so funny. You watch Singles Inferno. Singles Inferno is so good. Sorry, we're just gonna chit chat for a little bit. I'm still eating. I'll look at charts in a second. My wife is, I'm pretty sure, wait, she's gonna get mad if I get this wrong. Pretty sure she's Spanish, but I'm pretty sure she's Ecuadorian as well. Yeah, Ecuadorian. I think I have, yeah. I know she's Ecuadorian. I'm trying to figure out if she's Argentinian. I'm pretty sure it was something like that. But I can't remember. I know she's Ecuadorian. Met on Tinder? No. We met when I was a famous TikTok guy. That was years ago. When I used to stream on Twitch and get really drunk, and now I switched my life around and I love it. Look at the SPY. I probably will. I'll have to sleep in bed with Bruce, and that's just gross. The SPY making a rig move up. Look at that. People going, oh, you should buy the dip. This is a good thing. Jim Cramer said. I don't have TikTok anymore. I got to see the famous side and how people are in that. And once you get past that point, you start to get in, you realize everyone's a douche. I don't like that. I did drinking comedic content. The girls and the gays loved it. I'm in love with Keith Gill, but I'm not gay. Is that weird? PPI upsets tomorrow. That's a key thing actually we should talk about here, the PPI. Okay, the PPI. So just so you're aware, tomorrow the PPI comes out, and look at that thing. PPI month over month, 0.1, 0.2. So you don't think the craziness can continue? But if that surprises, because everyone thinks this is 0.1, 0.2, if that surprises, that might be funky. But we'll see what happens with this. Then you get core PPI, then you get initial jobless claims, all these things. So if one of these numbers are bad, just know the market maker can use whatever headline they want now to say that that's the reason the market's going down. PCC at 0.8. To try to write you a song. Where's the dollar? I'm like mixing it up. Dollar's still higher, even during that move from the SPY. Volatility dropping off dramatically. This is the fear. The fear is sucked out of the market now. You can maybe squeeze if we get a good number tomorrow because the daily's crossing over. That daily crosses over. You got yourself a squeeze, son. But very dependent on the data tomorrow. We're already squeezing. I mean, Jesus, like, look at that thing. Downfall of us all, but XLU looks like ass. GME continuing to drop down. Let's see if we can see that 15-minute get some kind of bounce. We need some kind of run here. Oh, we only got 5 minutes left in the day. Shit, let me eat so that I can break down some stocks for you guys. Because we're not doing a video tonight, I'm going to break down some stocks. Dotted line. All right. Let me turn off music so I can focus. JP Morgan is no longer allowing market orders for GME. There's a new thing coming out right now. Yeah, a lot of people posting that. Someone was like, people watching Powell and the Federal Reserve had 35,000 people watching. Roaring Kitty, aka Deep Effing Value of GameStop, GME had 620,000. All right. We got 4 minutes left. Let's see. Looks like we're getting another SPY move upward here. Probably the move to expect, maybe with a daily expected move for tomorrow. Maybe we can see a move up. Okay, so we're paying attention because we know this is just rigged move after rigged move. Pretty much the best way to look at this market at this point. First of all, Jay Powell just saying nothing different, right? Saying nothing different. Just saying he's holding it higher for longer, and then he tells you, then they ask him, well, how are you not going to break something if you're holding higher for longer? And he goes, well, in the past, when they held something higher for longer, they held it for too long, and then something broke and they had to drop rates dramatically. And then he literally says in the next breath, but we're different because we're just holding it for longer for a little bit and reacting to the data. The problem is they're not reacting to the data at all. They are just holding it longer and longer and longer, which is what they do. So they're telling you that's not the thing, but most likely they just hold it higher for longer until something breaks. And we have 63 banks that are in trouble right now. We have the GME and AMC problem that could really make liquidity very difficult on banks, market makers, everyone across the board. Okay, but for the SPY here, what do we say? Bruce, I swear to God, you mess up my analysis, I kill you. I'm just kidding. I won't do that, guys. All right, so 15 minute, if that curls up, okay, we can see some kind of divergence, maybe something like that. He's just a little jittery today. I'm sorry, guys. But I think the main thing we need to pay attention to here is the daily scale. I mean, you're just hanging up there in no man's land. First of all, this is the unknown. So you don't know how high this could go. If they want to make it go higher forever, they can make it go higher forever. But I would say from an investment standpoint, am I really going to start investing at this level? Yeah, they can make the craziness continue, but we're also seeing something different. We're seeing the dollar start to pump right now, and the dollar has bottomed all the way back in December of 2023. That is very key to understand. The dollar has bottomed in 2023, and we have seen the dollar rise and rise and rise since then. Now we've seen a bottoming in the dollar, that curling back up. We're seeing a wick up at the end of today. So be very cautious because this all could come to kaput. We have the fear that is completely sucked out of the market now. It is a recipe for disaster. If they want it to happen, we know that it is rigged. It's if they want it to happen, that's when it'll happen. Just go watch The Big Short. Watch when he's freaking out how stuff is worthless and the fact that, you know, his value isn't going up with his position. They are giving it time, waiting for themselves to get the right exposure so it doesn't hurt them, right? That's what they did in the movie. That's what they're most likely doing with AMC and GME. So what I would say is I would wait for the daily to cross over. I want daily momentum to be with me to the downside before I see some kind of pullback, some kind of downward move. I'm going to me myself with my trades. I'm not necessarily doing anything based on the technicals except for Palantir, and I'm going to show that off in a moment, okay? Let's get through the Qs and then I'll show you guys Palantir. Same thing with the Qs. We noticed this. It came up to that daily expected move. This is the most likely area today to see weakness. Now, if we end in this area, then we're going to get a new one. So we will give that out in the morning. Come back live tomorrow morning. Make sure to smash that like button so more people know they can come get these ranges. It is the most, this is more useful than some regular support and resistance. This is exactly what the options market is pricing in a stock to go in one standard deviation. That means you have a 68% chance to head up to, or when you head up to here and get outside of it, to land back in it, because this is all that's expected 68% of the time this week. 68% of the time this week. So the fact that we're up here, that means we're experiencing a 32% time. Now that can happen. You have to pay attention to the shorter signals in here, but we still, early on in the week, Wednesday, we have 2 more days. We'll see what happens with the rest of the week. We are also outside of the monthly. Okay, so this is an area where we can start to see things fall. If we just do this and this and this and this and this, that's going to be insane. I think we're going to end up back in these yellow lines by the end of the month. Now that could be we go up like this and then we come right down. That could take time. But I still think that this 68% chance, we've been landing out of these monthly zones too much, way too much. We're seeing way too many squeezes, way too many rigged moves. And even last month, we landed outside of the expected move. We dipped into it, right? We dipped into it. Where was last month? It was this date right here. We dipped into it, and then at the end of the day, they all closed their positions, and we ended outside of it. That's very key to understand. You do not land outside of monthly expected moves very often, especially 2 months in a row. And I hate the fact that sometimes we're landing on like whole numbers on a lot of these stocks. I'm noticing when I'm making the ranges, I'm seeing whole numbers like every week, and I'm like, this is just weird. So I would wait for this to cross over, okay, for that actual daily momentum to be with you, and then you can pay attention to it. Maybe it turns back up. We can pay attention to those types of things. XLU, you just got to pay attention to the difference here. The difference between the SPY and XLU is why we caught this move right here. Now it is like this. Eventually it will catch up. I'm telling you, there's very little argument here for XLU catching back up to the SPY. Very little argument for the XLU catching up. Now we'll pay attention to it, because if this does cross up and the SPY starts to turn down and cross up, maybe it creates triple divergence or something like that. But we'll pay attention to it. Let's show off Palantir first thing. This is a great trade setup. Why is it a great trade setup? Because I'm seeing weakness that could roll over this daily chart. Now, what weakness am I seeing? So what weakness could give us a daily pullback or maybe a daily reversal in trend? Most likely a daily pullback. I'm not too bearish on this at all because it's in positive territory. It's pretty up there. Well, 2-hour divergence. 2-hour divergence likes to roll over daily charts. So the cool part here is because I see the 2-hour, now I can see, is that going to pull back, pull back, pull back? You saw the last time we crossed over. We got to do some little pullback here, but then we bottomed out. So we'll see if this is able to break that low. Now, if this is going to be there, what would be a good indication that that is going to cross? We already talked about this before it happened. Well, a 30-minute divergence. What's the problem? We have a 30-minute divergence here as well. Now, the only thing here that is a problem is that 30-minute divergence isn't in this move. You'd usually like it to be in this move right here. So there is a good probability that this sees one more pump up and then it does this, and that's when the 2-hour really sees some weakness, okay? I just want you to be aware of that because I posted this on Patreon. You still need to know how to manage your risk. If you don't know how to manage risk, take the course. Even if you just want to take it to manage risk, that portion of the course is so freaking useful. It is insane. It is insane how useful it is because you wouldn't have been ripped apart by Apple. Apple would not have ripped you apart. Your risk management that you learned in the course would have had you out right here. This bar right here would have said, nope, do not do it. Do not do it. And that right there is because you crossed up. Positivity. Positivity happens in positive territory. Look at that positivity. This right here is, haha, market maker, you didn't trick me. I'm risk managed. I lose 15, 20%, but you don't lose 100%, and that is a very, very big deal. Now, Apple, as of right now, the only thing that I see is this little 5-minute divergence that's going negative. As of right now, it's pointing straight down. The 2-hour is way up there. The hourly, I think I was looking at this to cross, but maybe it's the 30-minute actually. Yeah, 30-minute did cross, so now it's saying I'm in a 30-minute pullback. That is way up in positive territory. We can probably see another push like this unless something really bad happens and this was all some kind of big trap and enough retailers are trapped here, they just rip your money away. We'll see. We'll see, but you are way outside of that weekly expected move at this point. Weekly expected move is somewhere in this area right here. It's somewhere right in here. So by the end of the week, Apple's supposed to end down here. Now, I say that and people go, oh, let me take that. No, don't think that because this easily could just react down and then use it as support now. This is why it is the best support and resistance you can ever use is weekly ranges, weekly expected moves. Okay, now you can use that as support to head higher. You want to see if you're able to break back through that. That would be a good signal. Okay, just want you to be aware of that right now. Apple in a 30-minute pullback. Tesla looks like it's about to have a 30-minute pullback. What did we say? Well, if you get above 173, pretty much 172 to 173, once you break above that, you can see a stronger move. And then I would pay attention to 180.92. What do? We gravitate right up to this level where all these traps have been made. You see all the traps here. Sure, we get a couple spikes out of them. We could see another upward move, but it looks like right now that 30-minute could curl down, curl back up. This is not a reason for entry in anything yet, but if that curls down, hey, that can curl back up. Maybe we see that actually tagged, we get some kind of divergence, then we'd have more reasons for a trade. Okay, so just pay attention. Tesla's still just ripping people back and forth. Retail loves to trade it. Amazon, this one here actually forming that divergence again. And once again, we curl over. This is what I'm saying about the rigged moves. I have not seen the stock market like this in a long, long time. And not a long, long time, just most of the time you'll see moves like this in like a bear market squeeze, like a short squeeze in a bear market, because you'll see these funky moves like this. But usually once you cross down by the center line during those moves, you just see that drop. This is different. It is still just saying like I could go higher if I want. I think it's at the weekly expected move maybe now, but it might have a little bit, I think it has a little bit more room to go. So I want to pay attention to any time this actually rolls negative. The main thing I would say is the 2-hour crossing, and look at that. The 2-hour was able to cross. I think even if we get that pop up over time here, we're going to see that 2-hour beat down, and then we want to see if that can curl back up because it is still well within positive territory. This is all stuff that we talk about in the course. It's $100 for all of June. I'm doing that for a reason. I think this market is very hard to trade in. NVIDIA, the best chart here is going to be the hourly. You see the triple divergence. You see the triple divergence. Now that has to roll negative. So what I would say is overall, I'm still looking for this daily to roll over because you're probably going to see a decent sized pullback here. I really like the point right here of breakout, 95.66, boom, right there. That would be a solid pullback, and then we could see if this wants to be rigged for one more move. We'll see what happens going forward. All right, AMD, the problem here, you're starting to roll negative, right? You're right on the edge of rolling negative, which means I can head down from here. I think there still might be another 2-hour pop left in us, and then we turn back down. I think maybe we get another higher low, or we get a breakout, okay? So we see the two highs here. We can kind of connect those right there. Boom, okay. So the likelihood here is I think we get some kind of curl up and then we rotate back down into next week. We'll see if that happens. If that's going to roll up and remain positive, well, hey, that's going to see some positivity. So positive territory being very important here. Right now, you're negative. 30-minute right now, you're negative and about to cross over. So we kind of gave up 160.8 or 160.83 today. Not the best sign, but you do have that weekly expected move right below you. So that could be some kind of higher low at this point. Watch if that starts to cross this center line and go positive. That 2-hour might be rolling up for AMD. If good PPI would help that out. Meta, I think the main thing to see here is just the 2-hour, how it's still not crossed over for a pullback. Okay. You just don't see these types of moves very often, so you really don't want to chase anything. You really want to wait for your moment, and it takes a lot of patience, I get it, but this would be a better entry than this right here would be better than trying to chase this right here. And even if it went up higher, if it did this, this would be a better entry than this right here, okay? You have to be patient and be thinking about your risk at all times. Right now, the risk is, well, the dollar just went up while the SPY went up during today. I know it went down, but it went up while the SPY went up at the end of the day. So that tells me some insiders were selling. Microsoft, this one here just screaming higher. The only reason I wanted to talk about it is because it broke through this high. Awesome. 2-hour curls up, stayed positive the whole time. So looking for that pullback on a 2-hour. Do we see any weakness on a 30-minute? Yeah, we're going to see some kind of rolling over here, but just no real good divergences. So another rig stock showing its face here. And I think that we're about to come to an abrupt end, if I'm being honest. I think this will be a bear market for sure, but we're about to see some rifts down, some rifts up, and that's why we have to pay attention. All right, going forward, AMC. Let's talk about these for a second here. And what do we notice about the daily scale? Well, on the daily scale, what do we notice here? It rolled over into a pullback area. Okay, so this is a bearish contrarian indication right now for AMC. This says pullback. This could continue to pull back and pull back and pull back like this, and then turn around way in the future, and then this might be the right moment. This could take a long time. It could go all the way into July. Remember, they're fighting the stock right now. Pay attention. Right now, you're in a 2-hour pullback as well. Still positive, right? Still positive on the daily, still positive on the 2-hour. But right now, it's saying pullback, and you got to wait for that to rotate up. One big signal will be the 30-minute. The 30-minute crossing up would be a good sign. We haven't lost the trend just yet. So the trend is your friend until it is not, right? So we want to see if this at any time can curl back to positive. That would be more the moment. You notice here, it told us positivity is coming. Positivity came. Over here, it said positivity is coming. Positivity came. Then it dipped back down. It said positivity is coming. Right here. Okay, positivity came. You just got to wait for your moments. Now, this could pop up in the aftermarket and the post market. Looks like it already is. We'll see. Now, we know about AMC. They don't want you to close above 633. That's going to be a big deal. And it seems they really don't want you to close the week above $5, in my opinion. 30-minute for GameStop, all the same things with the daily side. We'll see if that rolled over real quick, but this here, you need this to rotate back up. Now, if that just gaps up and it's rotated back up, that could be it, right? That could be it. So you just want to pay attention to 41.17. You need to get through that, and then you need to get above 47.57, way up there. You need to get above those levels. You get above those levels, you got a good shot at a sneeze. 2 hour though was curling up, did not confirm anything, so really waiting. The 2 hour, the reason I like it is its momentum is very good. You see the buy point right here. Yeah, you go through some mess, but big pop, and never curled back over. It did. That told you 2 hour pullback, little bounce, 2 hour pullback. Okay, let's see what happens from here. That's pretty much what I'm getting at with GME. On the daily scale, what do we notice about the daily scale? Well, it rolled over and it's saying pullback right now. So if you start to lose this trend, you could pull all the way down to about $15. You could pull all the way down to this area before you actually see that turn around. You just want to see if that's going to turn around in positive territory. Boom. What a breakdown, right? Volatility heading lower. The reason I'm paying attention to it, I believe it's a 2 hour. Yeah, 2 hour divergence down here at the end of the day. So if we start to see volatility come in tomorrow morning, maybe PPI does shake things up. We just have to pay attention to that actual number. We don't want to try to guess. We want to react. So this is a way to react. If the 2 hour curls up here into positive territory, the 2 hour curls up here on the MACD into positive territory, you have a good shot of rolling this daily, start to reject and turn back up. If that goes positive, it's bad news bears for the market, in my opinion, because if that's able to roll positive, it's going to break through this. Sure, we can see a retest, but it's going to break through this. We have the 50 really close to the 200. Crash signal is right there. Holy crap, I'm lightheaded after that one. That was a big one. That was solid. We did good. We did good. We did good, didn't we? Did we do good? Was that solid? Who says solid, not liquid? Who says solid? Yeah, so AM, hopefully you saw that. I explained GME pretty well here. You do not have daily momentum necessarily fully with you right now. You're still positive, which is a good thing, but you're rolling down saying pullback. You're saying that. What happened to Apple? Well, the nice person in me who believes that the market is not rigged would say, oh, this is probably zero, like, you know, short-term option profit taking. The everything is rigged in me is saying they're going to keep messing with Apple how they messed with Nvidia and try to take as much people's money as possible at the end of every single day. So whether that is some rigged move up or rigged move down, that's truly what I believe is going on in here. I'm not saying that has to be what's going on, but this move right here is it's another AI titled move, which we're in an AI bubble. And if you don't think we are, like, AI is not really making a lot of money for these companies yet. They're giving kind of like, they buy from themselves, right? They all buy from themselves. But at the end consumer, you have to realize the consumer itself might not be getting AI. I don't even want AI in my stuff. As far as it goes, I don't want AI in my phone to figure out every little idiosyncrasy about myself, to figure that out and give that to a company. I do not like that. So I just want to say, guys, thank you so much for watching. I really do appreciate it. I know I did that quickly, but if you need a breakdown, it's just scroll back about 10 minutes here. We just did a full breakdown of everything, and I think it's very, very good to just go through the stocks at the end of the day. That's why I started the YouTube channel, was to overall be helpful. So thank you. Thank you guys for being here. Thank you guys for liking, subscribing, joining the Patreon, asking questions. You guys are awesome. If you want some more like clarity on how I do things, the course is great. If you need clarity on the MACD, if you're new, if you're brand spanking new, the course is great. Having the knowledge is great, even for investing. So if you don't like how the stock market is, I totally understand. And that makes total sense to me. Even myself, I'm slightly thinking of stopping it and just being like, I'll just invest. I'll just invest or something. So investing is much, much easier, and doing daily charts or bigger time frames is much easier, right? Apple, daily divergence right here. Okay, sick. I'm going to invest here. All right, I'm going to hold that. I'm going to hold that. I'm going to hold that. Okay, if it breaks below the 20, I'm out. And now you look, you caught a big move. So this is how easy investing is. That's how easy investing is. It's like, okay, I got scared out, maybe right here. Okay, I'm back in. All right, cool. And I didn't have to sit in front of a computer and watch a 30-minute chart all day. So I'm going to add that to the course, by the way, an investing section, just like we added the risk management, like how to manage a trade, how to not get screwed. We are also going to do how to invest, and maybe I'll even cover crypto. I might even cover crypto in that investment one, because I think investment in crypto is very, very useful. Monthly charts are very, very useful when it comes to investing. Yeah, tomorrow morning we will be live again around 8 a.m. Around 8 a.m. I will be live. When does that PPI come out? Let me see when the PPI comes out. Let's see, when does the PPI come out? 7:30, so yeah, around 8 a.m., or wait, sorry. Yeah, 7:30, so around 8 a.m. I will be live. And if you're tuning into this and it's not live right now and you scroll to the end, just go back about 10 minutes and you will see the little breakdown. So thank you guys for joining. Remember, take that course if you need to learn. Do all the things you can. If you want to, you can just go through my videos and try to take some input from there, and then go back and try to test everything that I'm saying. It's very, very good to do your homework, to try to research as much as possible and practice before you actually put your money into the market. I look forward to you guys. Thank you guys so much. And yeah, I'll make sure to get that investment video there. Peace. See you tomorrow. No, I got to end with peace. Thank you guys for joining. Thank you for subscribing. Thank you for liking. Thank you for everything. And I'll see you tomorrow morning. Peace.